Pepsi with higher sales in the fourth quarter, beating analyst expectations as its namesake beverage and snacks drove gains along with sales in international markets. Sara Eisen is here at Post 9, along with PepsiCo Vice Chairman and CFO Hugh Johnston, who's also a member of the CNBC CFO Council. Morning, Sara.
Morning, Carl. Morning, Hugh. Thanks for joining us again.
Good morning. Good to be with you all, Sara.
So, good quarter, capping off a solid year. Wanted to zero in on the beverage business in particular in North America because it came in a lot better than analysts expected and has shown a lot of improvement even with Coca-Cola upping its game and its performance. What are you doing there to turn it around, and how sustainable is it?
Yeah, we feel very, very good about North America beverages and the performance for the year. You know, if you go back a year ago, we talked about this notion of the company pivoting to growth. So a little bit less margin focus, a little bit more orientation towards growth. And with that, we look to invest back in the business under a framework of faster, stronger, and better. Faster being more advertising, more feet on the street selling. We organize the business to get closer to the customer. And frankly, it's working really, really well. The advertising is paying off. If you saw the Super Bowl, it was awfully hard to miss us, and certainly hard to miss our beverage ads. In addition to that, we've put a lot of selling capacity in, and the innovation has been absolutely terrific. Gatorade Zero is doing phenomenally well. That'll likely be a $1 billion business in the next year or two for us. Bubbly is continuing to perform at outstanding rates. Consumers just love Bubbly, and now we're going to launch a Bubbly with caffeine. Mountain Dew is the one that's been a bit more of a laggard, but frankly, with Mountain Dew Zero Sugar, the product tastes, I think, better than the original Mountain Dew. So I think it's a combination of all those things.
I wanted to bring up Mountain Dew. I know it's an important brand, and it has been struggling. What's the plan there?
Yeah, the biggest thing is we really have sharpened up the advertising. And if you saw our Super Bowl ad, I think it was terrific. In addition to that, there's a big zero sugar market out there for Mountain Dew, and Mountain Dew Zero Sugar as a brand, we think, has got an enormous amount of potential. That combined with the fact that our organization is executing well in the marketplace, I don't think of this as quarters of good performance. I think of it as years of good performance to come. I feel like we're very much on the right track with PBNA and think we're going to do terrifically well there this year.
Hey, you, Jim. Good to see you, of course.
Hey, Jim.
One of the things that I think that Indra put in place, Indra Nooyi, and now we've got Mr. LaGuardia, but is SodaStream, one of the last things she did. And I've always felt that this is at the heart of sustainability. And I think that we deal with a lot of companies now, and they want to try to figure out how not to have plastic. Is this not the longer-term hope for those who think that you put too much plastic out into our Earth?
Yeah, I mean, Jim, obviously we're doing a lot of things to manage plastic and to reduce the impact of plastic. SodaStream was one of the major strategic thrusts in that regard. And that business is also doing very, very well, and it really is early days as well. If you look at the SodaStream business in totality, it grew over 20% last year. It is now a $1 billion business for us. So we've added another $1 billion brand to the portfolio with the growth that we've experienced in the last year. And frankly, if you look at the opportunities for growth, in Northern Europe, the penetration of that business is as high as 20%. In the United States, it's down around 1%. So I think, again, we've got many, many, many years of growth in SodaStream, and it's going to be an important, not just product, but an important platform for PepsiCo as we build out our businesses more broadly to capture growth.
Right now, we are starting to see some advertising for it. I was kind of it was a quandary to me why you didn't put some advertising initially for it. Are we going to be starting to think of SodaStream as a major platform where we're going to see as much advertising for that as we would say Diet Pepsi?
You know, over the course of the next 5 or 10 years, I wouldn't be shocked to see that. Not at all. I think SodaStream has got potential for probably exponential growth if we really get the model right in the United States and as consumers start to focus in on it. So I think it's terrific. It's the leading brand that's out there by far. It'll capture a disproportionate share of the growth that's out there, even as the leading brand. And yeah, it's a platform that we're super excited about.
Well, I want to talk about flaming hot everything. I mean, Frito-Lay, innovations. Every food company, Hugh, wants to get more into snacking right now. How crowded is that becoming for you?
Actually, to tell you the truth, in a lot of ways, we see it as an opportunity. Good competition, I think it's very healthy for the category because it creates a level of interest that's even higher. Clearly, snacking is on trend right now with busy lifestyles. And to your point about flaming hot, we're onto something there that I think is going to continue to grow for a long time. The flaming hot platform, because it touches just about every one of our brands, grew double digits last year. We expect it'll grow double digits this year. I've often joked with our guys and said maybe we need to have flaming hot oatmeal next as a new platform.
I don't know about that one. Hugh, you've got a good global perspective. I know China's not a huge portion of your sales, but you do have a plant in Wuhan. So give us some color as to what you're seeing there as a result of coronavirus.
Yeah, obviously it's a very difficult situation in China, and I think the government is taking all the steps that they can to try to manage this. From our perspective, it obviously happened during Chinese New Year, so a number of our employees were not working during that time anyway. We basically had all of our plants closed for a short period of time. All but one of our plants are back open, but our interest is in first making sure our employees are okay. Second, doing what the government directs us to do. Given the plants are up and running, we're back in business again. Distribution is a little bit of a challenge, but we feel like we're getting ourselves back. That said, it'll have something of an impact on the China business. For PepsiCo overall, China is less than 2% of our overall company, so it shouldn't be material based on everything we know right now.
One more quick comment, since you have such a good handle on the U.S. consumer. Are you seeing the continued growth in employment and wage gains play out?
We are. We see the U.S. consumer right now as very healthy, and we're certainly seeing lots of positives in all of our businesses. I mean, if you think about it, Frito-Lay had its fastest growth last year since 2013, PB&A since 2015, QF&A since 2015. So the growth environment in the U.S., driven by a healthy consumer, couldn't be better.